In December of 2016, the GASB issued an invitation to comment to gather feedback on 3 alternatives to the information that is now presented in governmental fund financial statements: near-term financial resources, short-term financial resources, and long-term financial resources. This is the 3rd in a series of videos explaining what the invitation to comment is all about, and it focuses on the near-term approach. The purpose of governmental fund financial statements prepared using the near-term approach is to provide information about spending and available resources for spending that were acquired during the period and financial results that may be comparable to budgetary information. It would be particularly valuable for assessing the amount of unspent resources that are available at the end of the year. The near-term period would be about 60 to 90 days after the fiscal year. If, based on stakeholder feedback, the GASB decides to further develop the near-term approach, it will consider what the precise period should be as a part of the deliberations that will lead to the next document issued for public comment. Under the near-term approach, financial resources reported as assets are cash and resources normally expected to be converted to cash in the near term, things such as investments and accounts receivable. The liabilities reported are those that are payable at year end and normally due within the near term, things like accrued payroll, accounts payable, and accrued interest. The near-term approach would not include information that is longer term in nature, such as loans receivable, buildings, streets, and other capital assets, outstanding bonds, and the net pension liability. Under the near-term approach, deferred inflows and outflows that would be recorded relate to inflows and outflows of a future period that do not meet the definition of an asset or liability, respectively. For example, amounts collected related to property taxes levied for the following fiscal year would be a deferred inflow of resources. Under the near-term approach, outflows of resources represent the spending of the fiscal year. Spending would include cash payments for a variety of purposes, such as employee salaries, purchasing supplies, outlays for capital assets, and the repayment of outstanding debt. Spending also would include amounts that are paid during the year but are due shortly after the fiscal year, such as accrued payroll and accounts payable. An inflow of resources would be recorded when a government acquires financial resources that meet 2 criteria. 1, they are available for spending during or shortly after the fiscal year, and 2, they do not come with a corresponding liability. Sometimes, when a government obtains financial resources, it simultaneously incurs a corresponding liability. For example, a city receives a payment from the state government to be used only for a particular program. The city would recognize not just that cash, but also a liability, because if the city does not spend that money on that particular program, it is required to give it back to the state. One of the benefits of the near-term approach is that it is more closely aligned with budgetary information, which usually has a shorter time perspective than the other 2 approaches. Furthermore, the near-term approach would be an improvement over the existing information in governmental funds for at least 3 key reasons. First, it would make the financial statements more consistent and comparable. Second, it would provide consistent guidance regarding when to record assets liabilities and inflows and outflows of resources. And third, the shorter time frame perspective would be close enough to cash flows that a separate statement of cash flows would not be needed, which may be the case for the other two approaches. On the other hand, there are some challenges associated with the near-term approach. Although it is an improvement over the existing approach, the near-term approach may have its inconsistencies as well. For instance, if principal on outstanding bonds matures shortly after the end of the fiscal year, it would not be reported as a liability. However, the interest that accrued on the bonds would be reported as a liability, even though it is due to be paid at the same time as the principal. It is possible that near-term fund balance, the difference between assets and liabilities, may give the impression that a government is better off financially than it really is. For example, if a government balances its budget by borrowing or not making required payments, it would make near-term fund balance look healthier, but not reflect the fact that the government has to repay the loan or ultimately make those skipped payments. In addition, financial results reported using near-term information may be more susceptible to being systematically managed by governments. This is because transactions could be structured so that they occur beyond the near term, and therefore their financial impact would not be reflected under the near-term approach. You can read more about the near-term financial resources approach in paragraphs 9 to 19 of Chapter 2 of the Invitation to Comment, which can be downloaded from the GASB website at gasb.org.
Your feedback on the Financial Reporting Model Project is very important to us. We would greatly appreciate your input. Please review and share your comments by the March 31st deadline.